All right, so we're going to go ahead and get started. Good morning, and thank you for attending today's webinar. Like I say, the month of June is Annuity Awareness Month, and here at IAD, we just thought we'll do a webinar just to give folks just a general overview of annuities, different types of annuities, and the biggest opportunities right now for annuities. So again, my name is Bernard. I'm broker sales advisor here with Insurance Advisors Direct, and specialize in life insurance and annuities. All right. So, as we said, today is Annuity Awareness Month. So, different types of fixed annuities. There are three different types of fixed annuities that life insurance agents like yourselves, like myself, may offer. One is traditional fixed annuities, multi-year guaranteed annuities, and fixed indexed annuities. So here, let me just go back for a moment. And then it's a traditional fixed annuities, and it's exactly what it is. It's a fixed annuity at a guaranteed interest rate for actually the life of the annuity, or until you are ready to annuitize. Multi-year guarantee annuity is the annuity is guaranteed for a specific period of time. It could be anywhere from 2, 5, 7, 9, 10 years, and that interest rate is guaranteed for as long as that guaranteed period. And then we have fixed indexed annuities. Now, indexed annuities, say they are a fixed annuity, and this one here, it is actually, it's not tied to the financial market, but it does have growth potential from the financial market or stock markets. So, for instance, and a lot of the funds or crediting strategies use the S&P index. So, whatever the S&P index does, let's say it's up, and just hypothetically, it's up 15%. Different crediting strategies will give you a percentage of whatever that growth is. So it's not tied directly to stock market, but gains are related to the stock market. Right. Okay. Money market versus an annuity. So in yesterday's and today's environment, pre-retirees and retirees are looking for safety slash guarantees, growth, and income. So what folks do, they look to CDs, money market accounts, and or annuities. And like I say, and that's for safety, growth, and income. And we're going to explain those in the upcoming slides. All right, so what is a certificate of deposit? Now, certificate of deposit, they're interest-bearing accounts offered by banks and credit unions. Very low risk and with a relatively low return of your investment. And actually it's used for, pretty much short-term goals. Now, earnings on those CDs are taxable in the year that the interest is earned, and but certificates of deposit are FDIC insured up to $250,000. So, advantage of a CD: protection of principal, minimize risk, guaranteed interest rate earn, convenience, and their FDIC protection. And what do we mean by convenience? Since they're a bank credit union product, and most of us go to the bank, go to the teller, they can pull up our information, and they can see how much we have in the account, and they'll ask, Mr. Tyler, we see that you have X amount in your account. Would you be interested in a CD? So, like I said, it's readily available as opposed to annuities, which can only be sold by agents. I mean, we have to go out and prospect for those folks, but as opposed to the walk into a bank and they can ask you and you signed up. So that's the convenience of it right there. All right, next is, what is a money market account? Now, a money market account, and basically all it is an ordinary bank account with checking privileges. Their interest rates are a little bit more than CDs, not that much, but of course a lot much more than would be your regular savings account, or if your checking account has interest added to it. So they require a large initial deposit than regular accounts, higher returns than, like say, regular bank accounts, and they are FDIC insured up to $250,000 banking product. Now, what is the advantage? They're safe and accessible, just like your regular checking account. Useful for large and infrequent expenses. So let's say you are looking to purchase an automobile in the next 6 months to a year. Perfect avenue to save that money, or actually kids going to school as well. That could be used for that as well. So now, for example, what is an annuity? Now, annuities is a way to preserve and protect 100% of money that's already accumulated. So let's say, again, we'll use Mr. Tyler. Mr. Tyler has $150,000 in a IRA or a 401k, and he wants to roll that over. He's going to roll over 100% of that money that's already accumulated from that IRA or that 401k. So it's a way to grow existing wealth with crediting rates that take advantage of index upswings and also receive tax-deferred growth, and that comes from fixed indexed annuities. Now, there is guaranteed minimum interest rates, guaranteed access to money, or terminal illness, and a guaranteed death benefit. And unfortunately, you don't get that with money market accounts or CDs. Option to meet short and long-term retirement income needs, including income stream for life. And as we go back, that retirees and pre-retirees are looking for that long-term income. All right, so what is annuity, and it's continued. So the advantages of an annuity. All annuities have three primary advantages: tax deferral, avoidance of probate, and a guaranteed income stream, which is optional for a fixed period of time or income for life. A lot of fixed index annuities do have guaranteed income for the life of the client, so you will not outlive your money. All right, so more specific reasons to invest in fixed and immediate annuities. You need to safely create wealth for your heirs. You need that tax deferred growth. You need your principal and interest guaranteed. You need your heirs to avoid probate upon death. And unfortunately, that will not happen with CDs or a money market account that will go through probate. You need your clients need an increased death benefit. You need stock market linked gains without the downside risk, and then that also goes more towards the fixed index annuities. And then you have money that is designated for inheritance. All right, so risk and gains of annuities, and I have this little chart here, and it just shows the the risks that are associated with stocks, mutual funds, variable annuities, bonds, cash, which would be your savings account, checking account, money market accounts, uh, CDs, fixed annuities, and indexed annuities. Now we'll look at the right side because we're going to look at low risk and no loss. So of course, with you have cash on hand, like I said, in your banks, be it your money market account, savings checking account, lowest possible risk. Same with CDs, uh, fixed indexed annuities. Um, or a fixed annuity with your MIGAs and your traditional fixed annuities, relatively no risk at all, with potential to grow. But now your fixed index annuities have the greatest possible growth with no loss. So we look at the left side. This is more of your variable products or equity products, such as your stocks, mutual funds, variable annuities, and bonds. And of course, there are greatest possible growth, but you have the greatest possible risk at the same time. So with that, there's no other investments that provide all these important features. So our annuity accounts offer safety, incontestability, as we said, creditor protection, privacy protection, long-term care, and terminal illness protection. So a lot of annuities now, they do have long-term care riders that are associated with the annuities, and a lot of them are free of any fees. So annuities are also liquid, high yields without risk, tax advantages, and they are flexible. So as opposed to our to CDs and money market accounts, annuity accounts clearly give you and your clients the better options. So what is the biggest senior market opportunities for annuities? And one that would be qualified retirement plans such as IRAs, 401ks, 403bs, SEP IRAs, simple IRAs, anything that's that your pre-retirees and retirees may have. And then folks that have certificate of deposits, and then like we say, those money market accounts, and then folks that are looking for long-term care, but may not, may not qualify or through underwriting, and then they have those lump sums available. The fixed index annuities definitely would be a good choice for those folks for looking for long-term care. And then also, and it's not listed here, but folks that have cash value, large cash values in their life insurance policies. Excellent. Annuities would be an excellent vehicle to do a 1035 exchange for those. So those are the biggest senior opportunities to get your annuity business up and going. And then say June is Annuity Awareness Month, but actually this is going to be ongoing. So for you'll receive an additional 35 basis points for submitting 150,000 in premium. Let's just say if you submit a case with us today that's worth 150,000, once it's issued and go through the waiting period, we'll give you 35 basis points off of the premium. Or if you collectively have say your first case is 35,000, and until you reach that 150,000. Once you reach that 150,000, we'll give you the 35 basis points. Like I say, this will be ongoing, not just relative to the month of June. And folks, that is it. Like I say, we're gonna keep it short. It's just a general overview of what annuities are, and like I say, we'll be having ongoing trainings, discussions on annuities. And you're more than welcome to email me, call me at any time with your questions, cases that you may have. We can put the cases together for you. Make sure that you have all of the information in place. And at this time, we'll open up to any questions that you may have. All right. Well, seeing no questions now, what to expect after this webinar? I'm going to give each of you a call, and a couple of things. I'm going to give you the 6 virtual tips that are useful that you can use that will help you with your virtual video conferences. Also, you're going to receive contracting for Equitrust, North American, and Nassau Re. Nassau Re will be more of an online. You'll receive a link for the Nassau Re. But these 3 particular carriers have been very proactive during the COVID pandemic that we had. I mean, they've increased their rates just to help folks or help those seniors that have looking for guaranteed income or looking for MIGAs, fixed annuities. And I say though they have been very good during this crisis to help folks out, and they're going to continue on with that, especially when everything settles down a little bit. So you'll be receiving those things from us, and again, please reach out to me at any time. You will be receiving a phone call and an email from me. This presentation will also be on our YouTube page, and each and every one of you, I hope that you go on that YouTube page and subscribe to it, and then you'll have access to all of our other presentations, webinars that we have from Med Subs, Medicare Advantage plans, limited medical. Everything is in our library. So just subscribe to that, and you'll receive notifications when we have those things are posted. So with that said, everyone, you have a good rest of your week. Thank you for joining, and take care and be safe out there. Bye.